Today we're talking about a major headline out of Omaha that every investor needs to pay attention to. Warren Buffett has officially stepped down as the CEO of Berkshire Hathaway, the company he's built into one of the most respected business empires on the planet. CNBC's 𝗣𝗟𝗗𝗘 breaks down what this transition means, why it's happening now, and how Berkshire is positioning itself for the next chapter under new leadership. In a moment, I'm going to play the CNBC clip so you can hear exactly what Buffett said in his own words, and right after that, I'm going to come back and give you my detailed reaction, what I think matters most in this handoff, and what investors should be watching going forward. So make sure you stay with me all the way to the end, because this is not just a routine CEO change. This is a historic shift in the investing world, and the implications go way beyond one company. Hit the like button, share this video with someone who follows the markets, and drop your thoughts in the comments. Subscribe so you don't miss the next important investing update. All right, let's hear what Warren Buffett has to say.
Big changes in Omaha, Nebraska this week, and the business community at large is taking note. Warren Buffett has officially stepped down as the CEO of Berkshire Hathaway, the company that he built over the last 60 years, and he's handing over the reins to Greg Abel. Buffett remains chairman, of course. That announcement from Buffett about this transition coming back in May at the company's annual meeting, it was a surprise not only to the shareholders, but to most of the board and to Abel himself. So what changes for Buffett today? Listen to what he told us just a few days after that surprise announcement.
Everything will be the same. I will come in. I won't be up there speaking at the annual meeting, but I'll be in the director's section. Maybe you'll interview me at the halftime or something of the sort. Who knows? But Greg will be the decider. He can't imagine how much more he can get accomplished in a week than I can, or a month. I mean, he just, and at the same time, he's not a distorted individual. He likes to play ice hockey with his kids, and he lives what would look like a normal life. And my guess is that if the neighbors didn't know who he was, they wouldn't have any idea that on January 1st, he is going to be the decider on a company that employs close to 400,000 people, and it's got plans to be around 50 or 100 years from now, and who knows what will happen, but it has a better chance, I think, of being here 100 years from now than any company I can think of.
Abel is inheriting a Berkshire company with a huge stockpile of cash. It was over $381 billion as of the end of September. And after a year when the company gained just over 11% versus the S&P, which was up by almost 17%. Abel, of course, will run all of Berkshire, having the final say on both investments and holding companies. Buffett offering some high praise of his successor. Listen into that as well.
And Greg's operated more than I have when you get right down to it. I mean, he's gone over to England to run something. He went out, he came to Omaha one time to run a business for a few years, and there's no secret formula that only CEOs have or anything of the sort. So I'd rather have Greg handling my money than any of the top investment advisors or any of the top CEOs of the United States.
That is a huge endorsement.
It is a huge endorsement, but it's an endorsement we've made, and I am going to have him handling the money of the, in effect, he knows business.
So does Warren Buffett, and in fact, he is going out, guys, after 60 years with probably the most impressive compound interest record of anybody in history. Berkshire shares, I think I saw a statistic the other day that said they could drop more than 99%, and they still would have outperformed the S&P 500 over his 60 years running Berkshire.
Absolutely. I mean, so it's going to be unrivaled forever. I think what's really fascinating is how the character or the sort of profile of the company might evolve under Greg Abel. I've always assumed it was going to be a lot less about, the invest in public shares of other companies, that portfolio manager type approach, even though it's going to be there, right? You have all these great investments. I just wonder on the operating side what that means and if it's going to be more centralized or how that really does break from here and how the market views. I mean, the underperformance this year, first of all, beat the average stock. It was up huge into May on the exact announcement. And
right,
it's very
and it was
defensive.
huge until he announced he was stepping down. But I don't think it
Yes.
has collapsed as some people thought it would at some point.
Not at all.
Without Buffett being there. And
That's
I think
right.
that's important, too, that continuity.
What you just watched is not simply a leadership update at a famous company, it is a major handoff in modern business history, because Berkshire Hathaway is not built like a typical corporation, and Warren Buffett is not a typical CEO. This interview is basically Buffett telling you, in his own understated way, how the machine he built will keep running, why Greg Abel is the right person to run it, and what really matters next for Berkshire, especially with an enormous cash pile sitting on the balance sheet, while markets obsess over themes like AI. Right at the top of the transcript, there is a quick line that sounds like it belongs in a totally different segment, but it sets the tone for the whole market environment. The host says that a lot of Wall Street outlooks for the year come down to where you land on AI, that AI is the determining factor. Whether you agree or not, that one sentence captures the current market psychology. Investors are trying to decide what to pay for growth, what to ignore, and who is going to be disrupted. And then the interview pivots to Berkshire, which has always been the counterweight to hype cycles. Berkshire tends to win by being patient, disciplined, and structurally prepared to act when other people are emotional. Now, the headline news in this clip is that Buffett has officially stepped down as CEO of Berkshire Hathaway, and he is handing over the reins to Greg Abel while remaining chairman. The way the transcript frames it matters. It emphasizes that the announcement at the annual meeting was a surprise not just to shareholders, but to most of the board, and even to Abel himself. That tells you something very Buffett-like. He does not treat succession as a theatrical event, he treats it as operational reality. He makes the decision when he believes the timing is right, and he communicates it plainly, without trying to manage the narrative minute by minute like most modern corporate transitions. Then you get Buffett's own description of what changes for him, and this is where you learn how Berkshire's culture is designed to survive leadership changes. Buffett says, everything will be the same. That sounds almost too casual, but it is actually a big statement. He is telling you that Berkshire is not a company that needs constant CEO supervision to function. It is a collection of businesses and investments that are supposed to operate with autonomy, with managers who run their own operations, and with a headquarters that is small, lean, and focused on capital allocation and culture, rather than bureaucracy. Buffett also points out that he will not be up there speaking at the annual meeting anymore, but he will still be present, sitting in the directors section. That is a symbolic and practical shift. Symbolically, he is stepping away from the spotlight role that became part of Berkshire's brand. Practically, he is also telling you he is still engaged, still around, still available, but not the final decision maker, and he makes that line crystal clear. Greg will be the decider. That word, decider, is doing a lot of work. Buffett is setting expectations for everyone who might be tempted to treat Abel as a placeholder, or treat Buffett as the real boss behind the curtain. Buffett is saying the opposite. He is saying Abel is not being installed as an operator while Buffett continues to run the capital. Buffett is saying Abel gets the final say. Then Buffett goes even further, and this is the part that should stand out to investors and business owners. He says Abel can't imagine how much more he can get accomplished in a week than I can or a month. That is Buffett acknowledging something most legendary founders refuse to say out loud. Time and energy are real constraints. He is giving Abel authority, not because Berkshire needs a different philosophy, but because Berkshire needs execution velocity and sustained stamina for the next era. But Buffett also tries to protect something else at the same time, which is the cultural feel of Berkshire's leadership. He describes Abel as not being a distorted individual, meaning he is not warped by power, celebrity, or ego. This video is sponsored by Value Stocks Investing Master Course. If you're looking to grow your wealth by investing in solid, undervalued stocks but not sure where to start, I created the Value Stocks Investing Master Course to teach you how to identify great companies, make smart investment decisions, and build a portfolio that lasts. Click the link in the description and pinned comments to get the course today and take control of your financial future. Buffett talks about Abel playing ice hockey with his kids, living what looks like a normal life. This is not small talk. Buffett is signaling that Abel fits the Berkshire model. Low ego, high competence, long-term mindset, and an ability to treat enormous responsibility as responsibility, not as personal identity or status. And then Buffett paints a picture that is actually kind of remarkable. He says that if the neighbors did not know who Abel was, they would have no idea that on January 1st he is going to be the decider at a company employing close to 400,000 people. That contrast is intentional. Buffett is saying that the person best suited to allocate capital and oversee a huge enterprise is not necessarily the person who wants to look like a king. In Buffett's world, that is a feature, not a bug. Then he makes an even bigger point that most investors gloss over. He says Berkshire has plans to be around 50 or 100 years from now, and he thinks it has a better chance of being here 100 years from now than any company he can think of. That is Buffett. thinking in institutional terms. He is not talking about the next quarter, not talking about the next product cycle. He is talking about permanence. Berkshire is built to endure because it has diverse operating businesses, a conservative balance sheet, and a culture of rational capital allocation. This is also a subtle message to shareholders. Do not treat this transition as a destabilizer, treat it as part of Berkshire's design for continuity. Now, the interviewer adds key context. Abel is inheriting a Berkshire with a massive stockpile of cash, over $381 billion, as of the end of September, according to the transcript. This is where the analysis gets interesting, because that cash pile is both a strength and a pressure point. It is a strength because cash is optionality. Cash is the ability to do things when others cannot. It is the ability to buy distressed assets, to acquire whole businesses, to support subsidiaries during downturns, and to avoid forced selling in bad markets. Buffett has always valued that. He has always preferred being unkillable over being fully invested. But it is also a pressure point because in strong bull markets, cash looks like underperformance. And the transcript immediately brings that up. Berkshire gained a bit over 11% versus the S&P being up almost 17% in the same period, as stated. When markets are ripping, especially when the gains are concentrated in a handful of mega-cap growth names, Berkshire can look slow. That is exactly when people start questioning why the cash is so high and whether Berkshire is missing the moment. From a reaction standpoint, this is where I want you to separate two ideas, performance versus preparedness. Berkshire is not trying to win every year. Berkshire is trying to compound over decades while never putting the organization at existential risk. That philosophy automatically creates periods where Berkshire looks boring, conservative, or behind. But the trade-off is that Berkshire is positioned to strike when others are over-levered, overconfident, or forced to liquidate. The cash is not there by accident. It is there because Buffett refuses to buy mediocre opportunities just to look busy. The transcript also clarifies the job Abel is stepping into. He will have the final say on both investments and the operating companies. That is crucial. Berkshire is two things at once. It is a giant portfolio of public equities, and it is a massive collection of operating businesses in insurance, railroads, energy, manufacturing, retail, and more. Running Berkshire means understanding capital markets and understanding real-world operations and how cash moves through a complex organization. Then comes the endorsement, and in my opinion, this is the most important moment in the interview. Buffett says Abel has operated more than I have, and he explains that Abel has run businesses in different places, including going to England to run something, coming to Omaha, running a business for years. Buffett is highlighting that Abel is not just a finance guy, he is an operator who understands how businesses actually function, and Buffett says something that should make every shareholder sit up. He says, there is no secret formula that only CEOs have. That is classic Buffett humility, but it is also a direct message. The role is about judgment, incentives, culture, and discipline, not theatrics, not buzzwords, not vision statements, judgment. Then Buffett drops the line that I think is the real seal of approval. He would rather have Greg handling his money than any of the top investment advisors or any of the top CEOs in the United States. That is enormous, because Buffett is not only saying Abel is competent, he is saying Abel is the person he trusts most with capital allocation, which is Berkshire's core competency and Berkshire's true competitive advantage. Notice what this does psychologically. The market loves to worry about key man risk. With Berkshire, the key man risk has always been, what happens when Buffett is not there? Buffett is using this interview to reduce that fear, not by promising performance, not by promising a new strategy, but by telling you that the person taking over has the right temperament and the right experience, and that Buffett himself trusts him with money more than the famous names people pay to manage money. Then, the hosts talk about Buffett's record, and they use that dramatic statistic that Berkshire shares could drop more than 99% and still would have outperformed the S&P over his 60 years, according to what they saw. Whether you focus on the exact framing or not, the point is clear. The compounding has been so extreme over decades that it is hard to even compare. Buffett's advantage was never a magic spreadsheet. It was consistent rationality, quality selection, and the ability to act decisively when opportunities were mispriced. So the question becomes, what does Berkshire look like under Abel? And the hosts start asking that directly. They wonder if it becomes less about investing in public shares of other companies, that portfolio manager approach, and more about operations. They wonder if it becomes more centralized, or if the operating side changes. This is exactly what investors are going to debate in the Abel era, because Abel's background is more operational, and he has been deeply involved in Berkshire Hathaway Energy and the business building side. My take is this. Berkshire's identity probably stays the same at the principles level, but the emphasis could evolve. Buffett's public stock picks became part of Berkshire's public story, partly because of the huge Apple stake, and partly because Buffett is such a famous investor. Abel might not generate that same portfolio celebrity effect. That does not mean the public equity portfolio goes away. It means it may become less of the headline attraction and more of a steady compounding engine, while operating businesses and capital deployment strategy take center stage. The more important question is how Abel uses the cash pile. That is the scoreboard the market will watch. A few paths are possible, and each has different implications. One path is patience, meaning Abel holds high cash until the opportunity set improves. That would look like continued relative underperformance in raging bull markets, but it preserves Berkshire's strike capability. Another path is increased repurchases, buying back Berkshire shares if Abel believes they are undervalued relative to intrinsic value. Buybacks are essentially an investment in Berkshire itself. They can be very powerful if done at the right price, but they depend on valuation discipline. Another path is large acquisitions. Berkshire's problem is that it is so large that small deals do not move the needle. Abel may have to hunt for elephant-sized acquisitions, which are rare, especially in markets where sellers want premium prices and where regulatory scrutiny can be heavy. Another path is a mix of increased investment in wholly owned businesses and selective equity investments, basically keeping the classic Buffett playbook but adapting to the opportunity set. When you combine that with the AI comment at the beginning of the transcript, you see a deeper theme. Markets are pricing the future based on technology narratives, and Berkshire is sitting there with a massive pool of dry powder, waiting for opportunities that meet its return requirements. The tension is that in narrative-driven markets, prices can stay elevated longer than conservative investors expect. So the discipline is hard. And this is where Abel's temperament becomes everything. Can he maintain Berkshire's discipline without Buffett's aura? Can he resist the pressure to do something just to prove he is in charge? Buffett is basically telling you yes, because Abel is the kind of person who lives normally, plays hockey with his kids, and does not need the CEO spotlight to validate himself. And I want to underline one more subtle point. Buffett says he will still come in and be around, but Greg will be the decider. That creates a transition environment where Abel can make real decisions while still having Buffett's presence as a stabilizing factor for culture, relationships, and shareholder confidence. It is like training wheels, but for a company this size, even that psychological stability matters. So if you are watching this as an investor, the big takeaway is not, Buffett is gone, so Berkshire is done. The takeaway is that Berkshire is built to outlast Buffett, and Buffett is deliberately handing over power in a way that reinforces Berkshire's core model: decentralized operations, disciplined capital allocation, and a culture that rewards rational long-term thinking. The market will test Abel quickly. People will judge him on whether Berkshire catches up to the index in hot markets, on whether the cash pile comes down, on whether buybacks accelerate, on whether Berkshire makes a big acquisition, and on whether the operating companies continue performing without interference. But based on what Buffett is saying here, Abel's job is not to reinvent Berkshire. His job is to keep Berkshire's machine running, keep the culture intact, and deploy capital with judgment, patience, and a long-term time horizon. And that is why this interview matters. You are not just hearing a retirement announcement. You are hearing Buffett try to leave behind something more valuable than his own decision-making. A durable system and a successor with the temperament to operate it the Berkshire way. Settings: use YouTube audio library only, use appropriate media, use a male clear American voice for the narrator.